السلام عليكم ورحمة الله وبركاته. الحمد لله رب العالمين والصلاة والسلام على النبي الأمين وعلى آله وصحبه أجمعين. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي آمين يا رب العالمين. Dear brothers and sisters, in this chapter, inshallah, I'll be sharing with you uh, some philosophies of Islamic Sharia, Islamic corporate governance models, and also I'll be talking what is governance and why is it important, and also I will try to introduce some of the standard setting bodies in Islamic financial institutions, and also I try to show you the overview of um, Sharia governance in Malaysia. So now, what is corporate governance? So corporate governance is a method by which a corporation is directed, administered, or controlled. The principal participants are the shareholders, management, and the board of directors. As we know that the modern day corporations where the shareholders they do not know the business and they appoint management people to manage their businesses. So based on that, so when there is a big corporation, so there are shareholders that they put their money in that business, and there is a management that will manage the business, and that management is separated from the shareholders. And then, in order to oversee the operation of the management, there is a board of the directors that they will oversee, they will direct the company. So, corporate governance is how a company is managed, how they are directed, and they are regulated in order to ensure that the shareholders' money are utilized for the let's say for the maximization of profit from the capitalism perspective. So, from the Islamic perspective, corporate governance is a set of organizational arrangement on how a corporation is directed, managed, governed, and controlled. So, similar with the conventional, however, this provides the governance structure through which all stakeholder interests are protected, the company's objectives are achieved, and the principles of Sharia are complied with. So, Islamic corporate governance, at well, it is similar with the conventional in a way that it also talks about the organizational arrangements, how the company is directed and managed. However, it puts some additional uh, it puts some additional requirement, which is Sharia compliance. That it is also part of the corporate governance to ensure the Sharia compliance of the operation, and also it has a different objective, which is to fulfill which is to fulfill the or to ensure justice among all the stakeholders, and also to protect their rights, and ultimately to achieve communal prosperity, or also the success in this world and in the hereafter. So that is the difference between conventional corporate concept of corporate governance in a conventional sense and an Islamic perspective. So, what are the roles of corporate governance in a financial institution? So, when there is a corporate governance, what role they play? So, first, they will promote corporate fairness to make sure there is a fairness in terms of the corporation's policies, practices, and the fairness is practice means to it ensures the rights of all the stakeholders, make sure the shareholders' rights are protected, the customers' rights are protected, and the employees' rights also are protected. And it promotes transparency, which is also in line with the objectives of the Sharia, maqasid Sharia. It should be transparent through proper reporting and disclosure. And there is also accountability, which is the concept of hisbah, means there is a check and people are responsible for what they are doing. Protect the rights and interests of all stakeholders. So that's part of uh, doing justice among all the stakeholders, even the clients and even the beneficiaries, even the people of the society, and comply with Sharia principles. So that is based on the definition as we understood. The role of Islamic corporate governance is also to comply with Sharia principles in the doing of the business. And finally, trustworthiness of the management. So as I said, in modern day corporations, the management are different from the owners. The shareholders do not manage the company. So those who are the managing the company, they have trustworthiness, or we call amanah, uh, which is a trust, or a trust that they are given to work for the best interest of the shareholders. So when we understand corporate governance, so in order, so some may ask why this corporate governance is important, and so we can understand the importance of corporate governance if we understand the governance risk. When there is a violation, if there is any issue in the governance, any failure in the governance, so it can trigger different types of risk, and also it may lead to, of course, the corporate failure. So corporate governance is also needed to mitigate the governance risk. So this is a risk arising from failure in governing the institution, negligence in conducting business and meeting contractual obligations, and from a weak internal and external environment. So corporate governance risk arises when there is a weak governance, there is a negligence in conducting doing the business, means when the management, they are not working at the best interest of the shareholders, and when there is a failure in the governing institutions. And I will show you after this that when there is a governance failure, it may lead to bigger issues, the corporate failure, loss, and some others. And these governance risks also result into some other types of risk. One is the operational risk, means that it is a risk of the failure of the system. It can be the IT, or because of the people, or even some of the transactions. So there is operational risk, and also part of the governance is the fiduciary risk, means the risk of losing the trust, when, especially in the case of Islamic financial institutions, if people lost the trust, then it can lead to withdrawal of money, and because if Islamic financial institutions, they have lost the trust of, for example, following the Sharia compliancy, so people no longer are interested to invest in that company. And there is a transparency risk, what means to disclose and to be fair, to be free from corruption in the governance. There is a Sharia risk, or we can say Sharia non-compliance risk, means whether there is a violation of the Sharia in terms of the transactions, in terms of their policies and procedures. And finally, reputation risk. Reputation is quite similar to the fiduciary risk. Ultimately the loss of reputation for the company that may lead to withdrawal of the shareholders' money, investment for Islamic financial institutions, or ultimately uh, the the reduction of the share price, and finally the failure of the corporation. So all of these risks are actually in uh, part of the governance risk. And here I'm showing you some of the big issues that arrive in the history of Islamic financial institutions due to the weak governance, or due to the the failure of the corporate governance. Starting, we can go back to in 2001, Ikhlas Finance in Turkey. It was closed because of very weak governance. In 1997, Islamic Bank of Africa, they lost the African currency, 50 million in African currency, because of they got a debt of 50 million in African currency, and also they had weak governance. In 1988, Islamic investment companies of Egypt, they closed because of Sharia non-compliant activities and irresponsible management. And one of the famous Islamic bank in is Dubai Islamic Bank, which also had an issue in 2009. There was the issue of major fraud case of USD 501 million, and the top executives, they were charged in court for their malpractice. So it's a corruption case. In the case of Malaysia, the Bank Islam Malaysia Berhad was also lost 457 million in 2005, and that was because of the weak debt collection from the clients, and also incompetent board of the directors. Among the board of the directors, there were none who got experience in the bank, working in the bank. So that was our major issue in 2005. And finally, in 2010, Tambil, or in the Middle East, they are also top executives are also charged in the court because of bribery and unethical profit. So these are the event that shows that uh, there are corporate failures, losses because of the corporate governance risk, because of the weak corporate governance. And this is it intensifies, or it becomes more important in the case of Islamic financial institutions, because they also have a trust that to follow the Sharia, comparing with the conventional financial institutions. So it is more important for Islamic financial institutions to follow the Sharia governance, Islamic corporate governance mechanism. So in order to have corporate governance for Islamic financial institutions, from the beginning of Islamic financial institutions, the first institution that was dedicated for developing principles and standards for Islamic financial institution was AUFI, which is the accounting and auditing organization for Islamic financial institutions, based in Bahrain in the Middle East, around in 1980s. They started, they are the pioneer in this field to develop standards. And after that, Islamic Financial Services Board, which is based in Kuala Lumpur, they also develop standards for corporate governance principles. So while AUFI is a combination of accounting, auditing, and also corporate governance principles, but IFSB solely focuses on the corporate governance principles. And in the Middle East, there is another institution which is called Hawkamah, the Institute for Corporate Governance, that also gives standards for the financial institutions in the Middle East. And in Malaysia, the Bank Negara Malaysia is also uh, give standards. It give policy, sets policies for Islamic financial institutions, and that is also under the Act, Islamic Financial Services Act 2013. So now, when we talk about the Islamic corporate governance for Islamic financial institutions, in terms of the application or the model for the corporate governance, there are differences of opinion, and there are different models. In the West, they have one model for the corporate governance. In in European countries, there is a one model. In UK and US, there is a one model. And so for Islamic financial institutions, there is also a model which is proposed by the Islamic scholars, even though that model was not properly implemented, but that was only the theoretical foundation for us to move forward on implementing Islamic corporate governance. So the most famous corporate governance theory that we know is the Anglo-Saxon model of corporate governance. Is usually uh, from uh, from US. This model is followed in US and UK, and we can say this is the capitalist model based on capitalism, where the shareholders will appoint the board of the directors, and board of the directors will oversee the managers, the management, and the manager will appoint employees. So the managers, they will act for the maximization of the profit of the shareholders. So here we can see that there is no other responsibility of the managers. They just need to work for maximization of the profit of the shareholders. Where the board of the directors, they are appointed by the shareholders, and they will oversee. They will not be in the part of the management, or they may be some of the board of the member directors might be part of the management, but in general, they are not part of the management. They will oversee, they will direct the company and supervise the management. And then we have the European model, which is the countries in Europe, except the UK. They have these models, and this model is more comprehensive than the Anglo-Saxon model. And this one talks about the welfare of the society, because according to this model, the corporation should work for the best interests of the society. So they in they their objective to make sure that all the stakeholders in interests are protected. So here they have two board. One is the board of the directors appointed by the shareholders, same like the Anglo-Saxon model, and then there is another one is the supervisory board. So that supervisory board will oversee the interests or the social welfare of the society, whether the rights of the society are fulfilled or not. So that will be is the job of the supervisory board that will supervise. And there is in that governance model, there is works council, trade union. So that will also have a link with the governance. So they have a what to say, because for them, the corporations, they actually work for the benefit of the society. So they make sure they bring the welfare of the society. So mm, the governance must work for the best interest of all the stakeholders. So that is their philosophy. And then Islamic corporate governance model. So even though this model is not completely implemented, but this is the earlier scholar, the pioneer of Islamic finance and Islamic economics, Chaudhry and Hawk in 2004. They have given this model, and that should be implemented. So the first in the Islamic corporate model, first is the Tawheed as the episteme on the belief. So Islamic corporate governance is different from the rational belief, or the belief in the capitalism or in the socialism. So it's belief in the oneness of Allah, and the success in the hereafter, along with the success in this world. So first, that is the belief system, the Tawheed, and then after that, there will be a Sharia board that should be the top, on top of all the boards, that will oversee the operation and the management of the company. And they also should use a shura, because in Quran and Islamic governance mechanism, the shura is a very important element. So they need to use shura or consultation to set the direction of the company, and they need to. And then there will be general participation from the shareholders, and then the community participation. Minimal regulation needed in that case. The shareholders and even the representative of the society, so they will be together, and then they will work for the social well-being. So it's quite similar to the European model, but it is different in a sense that there is a Sharia board, and then the belief system. Okay, and then the test they will work for um, testing unity of knowledge according to the Sharia principles, and determination of the interactive, integrative, and evolutionary process complementing corporate and social. So based on this model, so they will work for the social well-being, which is one of the maqasid of the Sharia, which is to achieve communal prosperity. So the Sharia board will be on top, and based on the Tawheed, they will use Shura, and there will be a participation from the community as along with the shareholders to set the to work for the best interest of the society, or to achieve social well-being, followed and to ensure that there is no violation of the Sharia. So if we compare between these three model, we can see here Anglo-Saxon, European, and Islamic model. So if you first on the episteme, or the belief in terms of Anglo-Saxon model, they believe on rationalism and rationality. So they believe that all the shareholders, they should maximize their profits. They need to maximize the utility of their wealth. However, in the European model, they also believe in rationalism and as well as rationality. In the Islamic model, it is faith-based rationalism. In Islamic model, there is rationalism, but it is linked to our faith. Rationality derived from the principle of Tawheed. So we believe on the oneness of God, and we believe in the hereafter. So Islamic model also calls for the maximization of the profit, but there is a balance. So where we need to make sure we also follow the Sharia, and also keep we achieve the social welfare and the rights and interests in the Anglo-Saxon model to protect the interests and rights of the shareholders only. So they make sure the shareholders' rights are protected. They are not talking about the rights of the welfare. Of course, there later on they have CSR, corporate social responsibility later on, but their basic the concern is the shareholders' right. And European model is they protect they aim to protect the right of the community in relation to the corporation. So they are more on social welfare, not only the shareholders' interest, rather for the community's welfare. Islamic model to protect the interests and rights of all stakeholders, but subject to the rules of the Sharia and ethics. So Islamic one quite similar to the European model to fulfill all the stakeholders of the society, but with the condition that it follows the Sharia and is based on the ethics and also the Maqasid al-Sharia principles. The goal for Anglo-Saxon model, the corporate goal is shareholders controlling managers for the purpose of shareholders' profit. So the goal is shareholders' profit. European model, the society is controlling corporation for the purpose of social welfare. In the case of Islamic model, maqasid sharia is to achieve the goal is to achieve the transparency, the communal prosperity of the society, which to fulfill the maqasid sharia and balance between profit and social welfare. So it's not too much on the social welfare, rather it's a balance between profit and social welfare. In the Anglo-Saxon model, then in terms of the nature of management, the management dominated controlling shareholder dominated, mostly the shareholders they dominate. An Islamic model based on the concept of vicegerency is the Khilafah, and Shura, balanced nature of management subject to the principle of Sharia and ethics. So the model mostly um, uh, gives us the philosophy that we are on the human being, we are only the vice grand, the management, they are only the vice grands, they are only the managers, they are not the ultimate owners. This is different. And then the management board, Anglo-Saxon model is one tier board comprising executive and non-executive directors. So the executive directors are the those who are the employees of the company. If they sit in the board of the directors, they will be executive directors, and they have some non-executive directors as well. uh, European model, two-tier boards, executive and supervisory boards are separate. In Islamic model, Islamic Sharia board and board of the directors, and Sharia board is responsible on the aspect of the Sharia and ethics. So there will be, in Islamic model, there may be one general board of the directors, same like the Anglo-Saxon model, but there will be a Sharia board to oversee the compliance of the Sharia. Now, so based on the philosophy, now we can see some of the overview of the corporate governance standards. So just giving you an overview of how the corporate governance uh, standards are that are developed by IFSB. The first, they have a general corporate governance approach of Islamic financial institutions. So here they talk about how should be the board of the directors, the independence of the board of the directors. Of course, these are the governance principles do not reflect the theories that we have just discussed, but they partially follow, especially on the Sharia compliance. And then the second governance principle on the rights of investment account holders, which is the Mudaraba account holders. So there are details discussion to ensure how the rights of the investment account holders are protected. And because the Mudaraba investment account is different from the conventional bank's account. And number three is the compliance with Islamic Sharia rules and principles. So this one talks about Sharia board, it talks about Sharia audit and how should be done, how should be the arrangement to ensure Sharia compliancy. And number four is the transparency of financial reporting in respect of investment accounts. So how should so this one talks about the disclosure requirement on the investment account in terms of the profit, how much profit and loss shared, and then what is the real profit from the investment, and how it should be reported, and the requirements to report. So these are some of the corporate governance standards. Of course, there is a detailed document, and there are many subsection of these standards. So Sharia governance. So when we talk about this corporate governance, so part of this corporate governance is the Sharia governance. That's well, maybe some of the scholars they disagree on the theory of Islamic corporate governance that I showed, but all or most of them they agreed that there should be Sharia governance in the Islamic financial institutions. So that is a obligation for all the Islamic financial institutions to have Sharia governance. So what is Sharia governance? So Sharia governance is a set of institutional and organizational arrangement through which an Islamic financial institution ensures that there is effective, independent oversight of Sharia compliance over each of the following structures and process. Means that according to the IFSB's definition, it is just an arrangement or procedures of a financial institutions to ensure that there is a Sharia compliancy, and there is an independent oversight or there is a supervision or monitoring of the Sharia compliancy of the financial institutions. And they mentioned that especially on these four structures, means four orga types in the processes of the organization. First, issuance of relevant Sharia regulations. So make sure what are the Sharia regulation provided by the Sharia committee, where they need to disclose it. Okay. Number two, dissemination of information on Sharia resolution to the operative personnel of the Islamic financial institutions. Make sure that what the Sharia uh, committee they give a resolution or fatwa, it is distributed, it is given to the management in order for them to implement, and there should be an oversight or supervision on that. Number three is the internal Sharia compliance review or audit, to make sure there is audit, Sharia compliance audit or review. Well, review mostly on the qualitative part and audit mostly on the quantitative part. And finally, an annual Sharia compliance review and audit. So with the internal audit, there should be a annual Sharia compliance audit and review, and also the disclosure. So Sharia governance is to ensure that there is a supervision, that all these four elements there is there, and then there is a proper monitoring of all these four. And just to make it simple, Sharia governance is a mechanism to ensure that the financial institution is following the Sharia, to ensure on that, and to take initiatives to prepare some arrangement in the corporations is the Sharia governance practice. So now I'm just going to show you an overview of Malaysian Sharia governance model, how the Islamic financial institutions in Malaysia, they make sure that they are the Sharia compliant. So in order to make sure they are Sharia compliant, there is a Sharia committee in every Islamic financial institutions, and so this Sharia committee is set together with the board of the directors. So of course the board of the directors will oversee all, and then in the management there are two organs that works, which are the Sharia audit function and Sharia risk management and control function. Previously, there are two more. There used to be Sharia research and Sharia review, but that was revised in 2019. So now, based on the latest model, there will be Sharia risk management control function, and there will be Sharia audit function. So this Sharia audit, they will report to the board of the directors if there is. They will assess if whether they will monitor if. And they will examine whether there is any Sharia violation, non-compliancy. So they will first report to the board of the directors. At the same time, also they will report to the Sharia committee. And there's no clear rule, but it's based on, I guess, based on the meeting. Sometimes they report to the Sharia committee, sometimes first, or sometimes they report to the board of the director first. So if there is any violation, they will inform the either Sharia committee first or the board of the directors. And then the Sharia risk is a mechanism, it's a risk, Sharia risk mitigation. Their objective is actually to mitigate the risk, not Sharia non-compliance risk or the Sharia violation before it happens. So they will identify, they will measure the Sharia non-compliance risk, and then they will inform the management to, of course, they are related to management because they will ask the management to take precaution before the Sharia violation happens. At the same time, they will also report to the board of the directors. And of course, under the board of the directors, they have a board a risk committee and also the board's audit committee. So Sharia risk management control, they will report to the board's risk management committee, and Sharia audit function will also report to the um, uh, board audit committee. And then there is another layer of supervision, which is by the central bank, the National Sharia Advisory Council, under the Bank Negara. They will also supervise the Sharia compliancy of the financial institutions. So that is this is generally the Sharia governance framework in Malaysia. So part of this framework there is a Sharia committee and Sharia audit function. So inshallah in the next chapters I'll be talking on details on the functions, a role of the Sharia committee, and then the Sharia audit for Islamic financial institutions. With that, I thank you. Jazakumullahu khairan. May Allah reward you with goodness. Assalamu alaikum wa rahmatullahi wa barakatuh.